We've calculated the ROIC of a business. That's very helpful. How else can we use that information? Well, like Mobison wrote about, you can use it to calculate a maximum growth rate without external financing. So basically what that means is we know how capital efficient a business is. So that kind of roughly tells us how much we need to reinvest in the business for growth. And so we can also look at the payout ratio, dividends and buybacks to tell us how much are they returning to shareholders, how much is left after that, and then how much do they need to reinvest in order to get a certain growth rate. So let's do that. So what I'm going to do is look at 3 years of history for Visa, just in case, we are wanting to make sure there's no like huge outflow. Kind of see that sometimes with buybacks, right? So I want to smooth some of that out. So we're going to take the averages for all these repurchase of common stock. So that's how much they bought back in the last 3 years on average. Let's look at the average NOPAT. Remember, I calculated this because Visa is one of my favorite businesses. Average 14,956. All right, so that gives us roughly a payout ratio is very high right now. And then let's take 3 years of ROIC, 33.3. All right, 2% doesn't look great. So what is this telling us? Basically, either the company needs to slow down its buybacks in order to get a higher growth rate, or it needs to finance it, debt, issue shares, whatever that may be, in order to sustain its growth rate, unless organic growth can kind of fill the gaps, and we'll see what happens along the lines of that. So hope that helps. Later.